what's going on in the market right now? What's happening with some of these stocks? Are they going to be flipping back to gains? Are we going to see some more detraction? Well, you're probably wondering that for yourself. And in this video, I'm going to give you an analysis of the technicals happening for Palantir, SoFi, Nvidia, Tesla, AMD, Meta, and Google. Let's not waste any time and let's jump right into it. So first of all, Palantir, I was pretty much saying that this is going to, be an overvalued stock because it continues to go up. But I'm bullish on it long term. But in the short term, man, there's going to be some volatility, and that's exactly what we're seeing right now. We've had a pullback from basically $200 per share, and Palantir was doing very well, $207 per share. Now we have a pullback. What I personally think is going to happen with Palantir in the short term is we're probably going to retrace back to this level right here. Maybe not 175, but $180 level. Okay, 10 more dollars of downside. And then we might resume back into an uptrend. And that's pretty normal of the market. You're always going to see, stocks kind of pulling back and then continuing on the momentum trajectory. Of course, if you look at the market cap, we're sitting at $452 billion. So this is not a small company by any feat at all. The PE ratio is finally getting down though. So if you look at the PE ratio for Palantir, it was well over 600. And I was saying how that's actually not that important. So 600 you see right here, it's going to come down significantly. Palantir is going to be 200 PE and then 150 and so on as time continues because the earnings are going up significantly. For me, Palantir is just a hold right now. I'm not making many videos on it because in my analysis, I think we're fairly valued at the moment. Next stock I want to go over is going to be Nvidia. This is a stock that has done absolutely wonders for people's portfolios. Literally all sorts and all kinds of gains. In the last 6 months, it's up 75%. You can see here we have a double top pattern, okay? 2 peaks. And both of those peaks saw an analyst upgrade to $275 per share and then $350 per share from Loop Capital, which is pretty insane. That's a really high price target for Nvidia, for one of the biggest companies in the world. And it was sitting at over $5 trillion. Now we're at $4.8 trillion. Recently, Nvidia CEO Jensen Huang gave what was supposed to be a routine talk in Washington, D.C. about the AI revolution, but it ended up being a 2-hour masterclass where he basically revealed Nvidia's entire AI playbook. So this wasn't just another keynote, it was a blueprint for how Nvidia plans to dominate every layer of computing. So if you hold Nvidia, there's actually a lot of good stuff that's going to be happening for the stock, and I think we're still going to get a really huge rise in the stock and a good impact on the portfolio. The short version of what he announced is basically that Nvidia's brand new Rubin GPUs is a lineup of game-changing partnerships with companies like Palantir, CrowdStrike, and Uber. So they have great relationships, plus big news in quantum computing, robotics, and even 6G wireless networks. So really good stuff coming out in terms of partnerships. And when I look at companies like Nvidia, like Palantir, their partnerships means everything for their business. Most people think that Nvidia just makes GPUs. These are just the chips that power the AI models, but there's actually a lot more. And there's like a secret that Nvidia is actually releasing new architecture like Blackwell or Rubin, and that's actually playing into their overall ecosystem even more. They're actually releasing 6 different chips and they all work together, okay? So when you see the synergy of what Nvidia is doing, they're geniuses, and obviously that's why it's the biggest, most valuable company in the world. They designed the GPU, the CPU, the networking chip, the data processing chip, literally everything. So think of it like a car factory, similar to how like Tesla has figured out the efficiency of like the whole process from start to finish. Except here, instead of cars, Nvidia's factory produces AI tokens. So that's what their system is, and they are incredibly efficient at producing AI, and we're in the AI age right now, so that's why Nvidia is the most valuable company. It makes sense. To get around the limits of Moore's law, which is basically like every 2 years there's a double in compute efficiency, to get around that, the rule that basically says that chips can't keep doubling in power forever, basically like a logarithmic return, like yes, you're growing it 2 times and then like you kind of stop, right? You stop scaling as fast. Nvidia actually started to connect multiple chips together, so that's how they're trying to get around that. So their GB200 super chip combines 2 GPUs and 1 CPU with a lightning fast 900 gigabyte per second connection called NVLink. So long story short, I did a whole bunch of research. I have a lot more notes here on the side, but I think Nvidia is going to be in a really powerful spot due to their relationships Of course, them teaming up with CrowdStrike, one of the top cybersecurity companies, to use AI to automatically detect and respond to digital threats in real time is super powerful. They partnered with Palantir for data analytics, and they're integrating Nvidia's GPUs and AI models into Palantir's data platforms. So that's why I think that Nvidia still has room to run. I don't think it'll hit $350 in the next 1 year. That's going to be wild, but I think that we can see a $250 stock, and obviously that is going to be a really huge increase in market cap. All right, now I wanted to cover SoFi, so I'm going to pull up SoFi right now. It's still hovering just under $30 per share. It's been a great ride. Like, we are at $35 billion in market cap. I've been covering SoFi since it was like in the 8 billion market cap and even lower than that. And I think that's what makes me a good coach as well, is I'm very early on trends. And now once you've already made money, it's about generating even more income through options and selling, covered calls, selling puts. That's what I'm doing with SoFi. On all my Monday and Wednesday sessions, essentially, I'm just trying to take advantage of the stability in SoFi, the growth in SoFi over the last 1 month. Very strong return, like just very, very good stuff. 16% in the last 1 month alone. In the last 6 months, obviously, we've seen one of the biggest rises of any really good company here, of 130% in 6 months. Of course, there's stocks that have grown more, but not stocks that are like at this size, this quality. I mean, this is really good stuff. This is stuff that I don't see every day. Obviously, it happens, but I don't see this every day. So SoFi has some of the best indicators for a bullish uptrend, as well as fundamentals, just exceptional. Like, this company has reported amazing earnings, and for me, the core bull case still remains that SoFi aims to disrupt traditional banking. And if you know anything about traditional banking, man, they're like dinosaurs. When I used to work at Goldman Sachs, it looked like from the 1980s, and I was working there like 2000s, right? So they're kind of old in upgrading their beliefs. They're old in upgrading how the management works. Like, I had to be in the office super early because I was working in Los Angeles. I had to be there like 6 a.m. Man, it was super early. And then the way you get promoted is like, the earlier you come in, if you're first to come in, then you're last to leave. It's like, come on, man, I don't need to like flex and come in super early and stay forever to have good performance. It doesn't make sense. And that's why traditional banking, man, SoFi is disrupting that. SoFi is making money because they're disrupting banking and finance by building and bundling banking, lending, and investing in one tech platform. That is like really revolutionary, and I'm happy about that. Not that I'm bitter about Goldman Sachs. I appreciate the opportunity. I work there and everything. I'm just saying, like, traditional banks, they feel like kind of like dinosaurs. They're so old. SoFi is coming in as that, what is it? The crater that made the dinosaurs extinct, man. So it's big. It's big stuff. They also have a really strong member flywheel model. So as users join, they adopt more products. They deposit money into their accounts. They take loans. They get into investing. Obviously, SoFi is now part of option trading. It's doing level 1 option trading. That's amazing, right? So that is super amazing that they can basically create lots of lifetime value through their customers that they acquire for like dirt cheap. And they're also shifting more towards fee-based and technology platform revenue. So this is more similar to how like Robinhood makes money. So they're looking at generating fees, and that will basically make it a lot better because they are sensitive to interest rate and credit risk right now. And as that's a risk factor. They're looking to diversify, and even if the rates come down, SoFi will make money with fees. So that's a really smart shift that they're making to diversify their revenue. Obviously, the tech platform is like really, really good, amazing, fast deposits, lower funding costs, and they acquired Galileo. It's been a while now, but the bank charter, when they acquired, gives SoFi the structural advantage. So now they have a massive advantage because from start to finish, they own the entire stacks. They don't have to pay third parties. So as long as they continue to scale their customer acquisition, which is pretty easy for them because their marketing is really good, then my base case is they're gonna absolutely crush it. They're gonna do super well. The SoFi and Palantir were both my plays. Going back to Palantir, I think the government sector is just super strong. It remains the backbone and how Palantir makes money, and they're using AI. SoFi is doing the same thing. They're using AI to generate high margin revenue. Same with Palantir. They have high margin software business. And I'm looking at innovative business models. So there are some risks, of course, with all investing, but I've been so confident on SoFi, Palantir, Nvidia, and it's really, really paid off. Now, the next stock I want to talk about is going to be Tesla. I made a few videos on going really heavy into Tesla. In the last month, hasn't really had the biggest gains. 6 months, it has actually been amazing gains. This stock is actually really stable to run option selling strategies. So you can sell options pretty easily on Tesla. It has high implied volatility. So you can sell puts to get into the stock. You can do covered calls to generate income on shares that you already own. And it's a really good stock for option trading in general. Because of higher implied volatility, you can just generate so much revenue on a monthly basis. I prefer monthly trading. That's simple and scalable for me. And that's what I teach all the students. We also do sometimes weekly stuff like weekly wheel. I have a video on that. But yeah, just generating income on Tesla is fairly easy, especially that it's in like a sideways pattern. That's not a bad thing. I think that the company is going to be bullish long term. Like the future opportunity is bright. Tesla's expansion into energy storage, autonomous driving, and robotaxi services could transform it from just like it's not a car maker. It's like an AI data company and everything, but is going to continue to drive more revenue through the other avenues that they are investing in, especially the AI-powered energy and mobility platform. Some of the risks, though, for Tesla is intensifying EV competition, obviously political controversies. Politics is dangerous for Tesla. Mr. Elon Musk, he's a little bit of a volatile guy. He's a little volatile guy. But yeah, because Tesla moves sideways, I'm telling you, in my Discord, we can make money. You already know, hand over fist, bicep over tricep. It's not even that hard by just selling out of the money options. That's all you got to do. Like literally, if you want to scale your wealth and generate income and build a portfolio that takes care of you so you don't have to be dependent on your job, you want to look for a stock just like Tesla that is high growth, has stability, right? There's a lot of stability in the last 6 months. The stock has not really gone anywhere. Okay. Yes, it's increased, but it hasn't it's been very stable. Okay. And the zigzag pattern is actually very conducive to running the wheel strategy. So yeah, take me up on the offer to learn more about working with me and using the wheel strategy. That's what I've been using to build my wealth for pretty much a decade already, a decade plus, but I wasn't using the wheel in the beginning of my early investing career. Next stock I want to talk about is going to be AMD. AMD is great because it's taking part of the piece of the pie, part of the juicy market of chips from Nvidia. They're not really like taking it from Nvidia per se. They're just kind of in the same ballpark, right? So Nvidia makes money, AMD makes money. They're really innovating a lot because AMD's MI300X GPUs are sold out through 2025, and it's projected to bring them like $12 to $14 billion in AI GPU revenue, which is pretty massive. And they have really good partnerships. So again, I'm looking at partnerships. They have partnership with Microsoft. They have a partnership with Meta, with Oracle, and yeah, just really good stuff that they are cementing in terms of like their future cash flows and revenue looks very promising. They also have a lot of good data center momentum. So EPYC CPUs now hold about 32% of server market share, and that's paired with Instinct GPUs for full stack AI systems. If you look at data center revenue, guys, it's amazing. It's just amazing because it's 80% year over year growth. They made $6.5 billion. And the best part isn't, it's cool to make a lot of money in revenue. Amazon makes a lot of money, but how much of it do they take to the bottom line? With AMD, their margin is 60%. It's about 60%. That's crazy, right? So if Amazon has a margin of 6% and AMD has a margin of 60%, there's a 10x difference, right? And if you think about it, that means that AMD making 6.5 billion of revenue means the same thing as Amazon making 65 billion. There's a 10 times difference in terms of what comes down to the profits. So data center is a really, really important part that I am looking at for AMD. And also software and ecosystem, their ROCm, AMD's open source alternative to CUDA, is rapidly gaining traction in enterprise AI. So not like a super expert at that, but the research that I've done, it's really, really promising. So it supports PyTorch, TensorFlow, and Hugging Face. So that's creating developer stickiness and long-term moat. So obviously these developers are using these tools, and it creates a good relationship and stickiness. Stickiness is what you want in software, right? So very, very important. And when I look at the overall market, I think SPY is in a really strong place. Yes, the market is like slightly pulling back, right? Like NASDAQ fell a bit, 1.87%. S&P 500 fell like 1%. This is a really good time to dollar cost average since you can't predict the future. I mean, when I trade options, I'm just looking for income and stability, consistent cash flow. But when you look at the overall like stock by stock, it can be very difficult to predict. You just can't. You can't really predict short term. So when I look at the long term and the research I've done, I think SPY is in a really strong place. I think SPY in the market will do fine in 2026. So Only thing is, SPY is not as diversified as you would think. It has 500 stocks, but 40% are really in the tech-heavy concentration. So I'm bullish, but yeah, it's you need some other stocks in your portfolio as well. Now, I wanted to cover Meta. So Meta fell a lot, which actually makes it a great opportunity to invest. I think Meta is cheap, man. I think Meta, well, a lot of these Mag 7 stocks are going for very good valuations, but Meta specifically, the P/E ratio is right now at 27. So I like where Meta's at. I really, really like it. Small dividend, market cap's at 1.5 trillion. I think this thing is going to do pretty well. I think we're going to see a $100 rise in like 3 to 6 months. Like exactly what we lost, we're probably just going to gain back next earnings. There's an overreaction to some of the tax stuff that Meta was talking about. So I think like I wouldn't really worry about it. If you're holding Meta, I would just continue to hold it. One of the best companies out there. Now Google as well, our Alphabet, same same thing. Google Alphabet I think is amazing. They have a really strong search advantage. It's gonna stay intact, man. That search advantage, it's there to stay. It's long term there. So this company is gonna be 4 trillion and 5 trillion. It's not really a question of if that's going to happen. It's really just a question of when it's going to happen, because like literally Chrome captures nearly 70% of the global browser market, and Android runs on roughly 3/4 of the world's smartphones. So there's a huge distribution moat. So Chrome and Android dominance, huge. They have Apple deal, which is still going very well. And they got behavioral lock-in. So whenever you open up your phone, behavioral lock-in is that most people don't change the default browser. So billions will continue to Google it by habit. And then Google now has the AI, the AI search, right? So if you type in, I think I showed it in my last video. It's like I think I used the example of like calories in salmon, and then it's like Google basically does the AI and it tells you like how many calories, and it's amazing. It's like super, super efficient. So AI overviews is amazing. Already 2 billion plus people use it each and every single month. And then AI mode lets users switch between traditional search and chatbot style answers. So very bullish on Google. The ecosystem is strong. YouTube, cloud, in ads all are running very well with massive data advantages. So when you look at the PE ratio, guys, it's good. Like the PE ratio is real good. It's 27. It's just like Meta, right? That's why I'm pretty indifferent. I think Meta and Google, you should be indifferent. You should just chop up your money and put it into both. Like 5 to 10% in both is easy. Like that's what you should be doing. Like if you want to hold a high quality company, like that is exactly what you should be doing, right? Mr. Mark Zuckerberg making very good plays. He's investing hundreds of billions of dollars into building massive AI data centers. And Google, pretty much the same thing. They are dominating on all fronts. So, you know, when you look at the market, the only stock that I'm neutral on right now is Palantir. And then SoFi, I'm bullish. Nvidia, I'm bullish. Tesla, I am fairly neutral on, which is great for the wheel strategy. AMD bullish. Meta, really, I'm very, very bullish on Meta. And I'm moderately bullish on Google. If you want to master the wheel strategy, which I recommend that you run on multiple of these stocks that I already covered in this video, then I have a full free course right here. I spent a lot of time, but you will exactly learn how to run the wheel strategy and profitably sell options on these stocks that I covered in this video. So check it out right here. I'll catch you in the next one.